Hello everyone. Welcome back to my book, Strategic Management Accounting, a Critical Exploration with a Sustainability Angle. We are now in Chapter 1, Unit 2, Definitions and Differentiations. In this unit, we will define strategy and strategic management accounting, and then compare strategic management accounting with other forms of accounting. So let's start with definitions. A good starting point is Henry Mintzberg classic definitions of strategy. Mintzberg identified that there are 5 different or interrelated angles through which we can understand strategy. The first angle is strategy as a plan. So strategy can be seen as a plan. So that means strategies do involves objectives, future objectives, and the ways and means of achieving those future objectives. To that extent, a strategy is a plan. However, one critical point needs to be emphasized here. Strategies are plans, but all plans are not necessarily strategies. Because for a particular plan to be a strategy, that plan should be related to a competitive condition or a war-like situation. So it is a plan directed towards understanding and deciding how do we act upon the competitive conditions that we face. So in that sense, strategy is a plan directed towards a competition. And second one is very close to this, which is a strategy as a ploy. So it is a game plan, it's a tactical plan. It is directed toward not a broader long-term competition, but rather very specific, particular competitive situation. Not a long-term success of a club, sports club, or rather particular game. Tactical plan. How do we face that particular condition of or that particular episode of competition? So that's strategy as a ploy. The third dimension that Mintzberg's talk about is strategy as a pattern in action. So in this dimension, we acknowledge that strategies are not necessarily, not always, deliberately thought of decisions. Strategies can emerge. There are emergent strategies. Strategies can emerge on the basis of the success of the previous actions, previous decisions we have made in the past. So our historical experiences, past experiences tells us that in this kind of a scenario, this is the way we have to think about it. This is the way, the type of decisions we have to make. And this is the way we have to understand our competitors and act upon those competitive actions. So if such understanding emerge on the basis of our previous actions, that's called strategy as a pattern in actions. Then the fourth dimension is strategy as a perspective. It is the way that the corporate managers, corporate leaders, and the strategists would think about, understand, appreciate the competitive conditions and the future conditions. So how corporate leaders see the future of the corporation, future of the market, future of the economy, future of the technologies, and so on. And then how these corporate leaders think about their competitors. How these corporate leaders think about their own desires of the corporate future and their own strengths and weaknesses. So that kind of understanding, that kind of a perspective is can also be seen as a strategy. So that is strategy as a perspective. Then the final P is strategy as positioning. And this is very important dimension. And this is the dimension that we will emphasize throughout this particular book. So in this dimension, strategy should be seen as the way we position ourselves in the competitive terrain. How do we deploy our resources in the competitive terrain? So therefore, strategy as a positioning involves time-space distribution, time-space allocation, and deployment of our resources in the competitive terrain. So how do we decide which kind of resources to be deployed in relation to a particular element of the competition? So that's what we call strategic or strategy as a positioning. And when we are doing that, when we are trying to deploy our resources on the basis of time and spatial distribution of resources in relation to the competitive conditions, we need analytical devices. We need analytical tools. We need to understand the competitive terrain, our strengths and weaknesses, our enemies' strengths and weaknesses, the opportunities and threats provided by the competitive terrain. Then, so that kind of analysis, that kind of understanding, that kind of epistemic activities are necessary in enacting and enabling strategy as positioning. So that is where the management accounting can play a critical role as an analytical device, as a set of analytical devices, concepts, frameworks, and techniques to understand, to appreciate, to comprehend the competitive terrain. And as a result, we will have a map, a strategic map of the scenario. We will have a kind of a well understood, agreed upon mapping and understanding of the competitive terrain, about our enemies or the competitors, about ourselves, about our alliances, about the customers, about the citizens, about the regulators, about various infrastructural conditions, about our supply chain partners, and so on. So that overview understanding, overall understanding is what we call mapping the competitive terrain. And then when we are positioning in that competitive terrain, that is strategy as positioning, we also have to decide what are the specific strategic objectives we want to achieve. So we need to have multiple strategic objectives. We set multiple strategic objectives in multiple dimensions: financial, political, symbolic, institutional, and so on. So that's a broader definition of strategy. So to summarize, strategy can be seen as a plan, as a ploy, as a pattern in action, as a perspective. They all ultimately driven toward achieving an advantageous strategic position in the market. So therefore, ultimately, strategy is positioning. And in doing so, we need various kind of calculative, analytical techniques, frameworks, and concepts. So that's total collection of analytical techniques or the calculative techniques, frameworks, and concepts is what we call strategic management accounting. And such analytical techniques or calculative techniques, frameworks, and concepts are not static. They evolve. They change. So what we consider to be part of strategic management accounting may not be those that we will consider them to be in another 3-4 years' time. Because these techniques evolves, these concepts evolves, these frameworks evolves. But either way, what we mean by strategic management accounting is the sum totality of various calculative and analytical techniques that we use to analyze and understand the competitive terrain, and then accordingly to decide appropriate strategies. So that's the definition of strategic management accounting and strategy. Now, when we think about strategic management accounting, we can compare strategic management accounting with other forms of accounting, with financial accounting, conventional or traditional management accounting, strategic management accounting, as well as sustainability driven management accounting. That means we have now to think about, incorporate various notions of sustainability. So when we incorporate these sustainability dynamics into our analytical tools, into our calculative tools, then our strategic management accounting become sustainability driven management accounting. And we can compare those four forms of accounting: financial accounting, conventional management accounting, strategic management accounting, and sustainability driven management accounting using a specific set of key questions. So those are the key questions I have used in my books to develop a comparative understanding among these four type of accounting forms. For example, you got to think about what do you analyze. And similarly, you have to think about what is your analytical focus and aim. So like that, there is a set of questions here. So you can use these set of questions to create a comparative understanding between those four forms of accounting. So in this unit, what we did was to define strategy and strategic management accounting, and then compare strategic management accounting with other forms of accounting. And then in my next discussion, I will talk about the unit 3, which is the domains of strategic actions. So until that, thank you very much for watching this video, and see you again.